Welcome back, everyone, to the Commission Keeper Podcast. I'm your host, Cameron Hodge, fellow real estate agent and owner and lead tax preparer for Superdad Tax, a tax forum out of Central Florida focused on all realtors across the country, trying to keep more commission in your pocket after the sale. And this week, I wanted to do a deep dive into kind of an ultimate tax guide for agents, kind of showing you how you're taxed at the IRS, giving you the basics and background of what's required of you, some tips on how to start initial tax savings, deductions, things like that, things that you can do, especially probably tailored more to newer agents, right? Your top 1%, your top agents. If you're listening to this, hey, go ahead, listen to it. I'm going to have some tidbits and stories throughout here between my own journey, but essentially I'm just trying to give you an overview of what does your tax plan initially look like, okay? Now, disclaimer, we're all individuals. We all have our own businesses, needs, spending, so make sure you get exact taxifies. Doesn't even have to be from my firm. It can just be from any tax professional you trust, understand, and we're going to go into professionals and what even the professionals mean in the tax space, right? Me included, okay? I'm an open book. I'm not some special person here, okay? There's a perfect fit for everyone, all right? So we're going to get into it. So naturally, taxes can feel overwhelming, right? There's tons of different forms, deadlines, deductions, rates, all this stuff, right? Now, most of us have used TurboTax or something like it, right? Maybe you've used a free service, like a lot of the veterans out there, they used to do taxes on base really simply, okay? In the W-2 world, when all you have is that W-2 from your employer, a lot of things are taking off your shoulders, right? Maybe you got a 401k, maybe you have some other investments, right? This is assuming you probably don't have any crazy rentals or things like that. Like, right, your income, every month, however often you get paid, each paycheck, you're paying your portion of FICA and all those taxes that the federal government and states take out. Your employer's paying their portion, okay? It's pretty self-explanatory and straightforward. But when you become into the self-employed world, right, even if you're still working another job, that income wildly changes overnight. And if you don't really know what's going on, you can kind of get hurt pretty quickly, okay? Keep in mind, some of the things I'm going to talk about initially, if you're not making that much in the beginning, right, I'm talking definitely under 50K, gross, and you're taking home a lot net from that. Like, look, the penalties that we're going to talk about probably not hitting you that heavy. You might not even notice them because especially if you're working another W-2 job, you might be owed a refund, right? And you'll see why you get a refund too as we talk through this, because the reality is you should only pay the government. There should be no refund or owed taxes. The goal is to kind of, you paid enough throughout the year and the government got exactly what you're legally required to pay to them, okay? So we're going to dive into it right now. Now, getting started, as self-employed, right? You haven't started an LLC yet. We're going to get into that in the next step, but you're just self-employed, right? You probably just got your license. You're just getting started. You're under a different brokerage, okay? How are you viewed, okay? You are viewed as a self-employed independent contractor, as a real estate agent, right? Most of us, since you're just getting started, you just have your real estate license. You have to be under a broker in every state I've ever been licensed in, right? I'm pretty sure it's all 50. Okay, you're paying your MLS dues. Maybe you're on a team, maybe you're independent, but you're under a broker. And what is one of the sign-up questions you get? Giving your W-9 information, right? How do they need to tax you? Okay, because your broker's not paying your taxes. Okay, now there have been models in the real estate world where you are a W-2 earner, right? I know a lot of builders do this. A lot different scenario. Okay, I'm strictly talking about majority of agents in the country, 1099. They are not getting their taxes paid W-2 from their broker. They are independent contractors, okay? Some things might get covered. Some expenses might get covered, but the reality is you're kind of fronting most things yourself, okay? Let's be honest. Most teams are taking more than they're giving these days. Not all of them. There's some good ones, but a lot of them are. So you obviously, every year, once you finish out your first year, you get your 1099, okay? Your breakdown of all the commission and money you got from your brokers. Could be revenue share, real estate commissions, all of it, okay? All of that is thrown into your W-9. A lot of brokerages nowadays also do, revenue share in the terms of stock options, things like that. That is a totally different form you're getting from owning the stock, okay? So not going to dive deep into that right now. We're just talking about commissions, 1099 income, okay? Now, here's the thing a lot of agents don't know. Technically, if you're making commission and if you know, because you're making some good sales, that you're going to owe at least, at a minimum, $1,000 at the end of the year in taxes, you are required as an independent contractor to make quarterly tax payments. Did you hear that? Now, let's say January, first quarter of the year, you don't have any sales and you make nothing. Okay? Great. You didn't make any money. You don't have anything right there. But every quarter that you're earning commission, you are required to make a tax payment to the IRS. Now, there are calculators online. Like I said, the newsletter, which is always in this link, I have some links to some IRS publications for you to read at, right? If you're like me, you'll have to do your own research. So I included those in there. Take a look at it. I even included where you pay for the IRS. But yes, technically as independent contractors, right? Now, if you're not making that much, you might get a refund, okay? This doesn't apply to you. You won't get a penalty. But if you're an agent out there closing enough deals, getting enough commission with that 1099 at the end of the year, and this could be from anything else, right? We're just talking about real estate agents, but technically this is any self-employed income. But you are required to make quarterly tax payments, okay? And don't forget, not only before you have, this is no LLC, right? This might even be an LLC, right? Keep in mind, if you just have an LLC, in California, it's technically a C-Corp because they're weird like that. But in all other states that I know of, it's an LLC. If you have not elected S-Corp, you are taxed just the same as someone who did not set up an entity. Okay? It's a pass-through. That LLC, sure, it's set up. Maybe allows you to make deductions easier. You can open a business bank account. But the reality is that income passes straight through to you. Okay? So it is not saving you any money, right? This is not S-Corp. This is just, I have an LLC, Cameron. Guess what? That passes through to you. You're still paying self-employment tax. You're paying, the 15.3% self-employment tax, like I just mentioned. You're responsible for both portions of Social Security, Medicare, etc. Okay, maybe your state has other, income tax. You are responsible, right? Employers are paying their portion. Guess what? When you're self-employed, you are paying both sides on top of the self-employment tax. So we're going to talk about S-Corp here in a second, but when you hear people say S-Corp, essentially they're trying to avoid that self-employment tax, right? Because when you start making enough, and I did another post on this, you can go look on the website, on the podcast site. It's there. I even did an episode. You can look back weeks back. I talked about should you be an S-Corp. When you start earning enough, it starts to make sense to hire the more you earn to be an S-Corp to save and kind of cut out that self-employment tax where you can. All right. But yeah, quarterly tax payments. I'll be honest with you, I didn't know this thing started either. So I need to look back in my past when I first got started, back in the beginning of 2020, because, I may have had some penalty that second year. Now that I think about it, it just is what it is. But yeah, that you are supposed to make quarterly tax payments when you are 1099. Look it up. Check out the IRS. Head to the link in the description. You'll see it. It's there. Now, remember, federal income tax, self-employment tax, state income tax if your state has it. Okay, you are required to make those estimated taxable payments. Example: say you made $80,000 in commission. All right, $20,000 is random expenses, marketing, whatever you got. Okay, just $20,000. So your net income $60,000. Okay. It's not like you have an S-Corp. I don't care if you just have an LLC or a C-Corp. If it is not elected as an S-Corp, guess what, Jack? That $60,000, you could even leave it in your business bank account. That's your income. Congratulations. It is going to be taxed like we just mentioned. Okay? But that means self-employment tax alone is taking $8,400 out. And assuming you have no other deductions, right? This is your only income. Guess what? You are supposed to, since you owe at least $8,400. Again, this is not any other tax, not state, not income tax, just on self-employment. You're over the $1,000 threshold. You should be making quarterly tax payments every quarter that you're making money. Okay? You got to be paying the IRS. Fun fact as well, okay? Even if, and this applies to anything, business tax returns, S-Corp, okay, partnerships, self-employed, individual returns, how many of you, I know I have, you're a tax professional, maybe yourself. Many of us, it's probably tax professionals, when they extend your tax return, individual or business, because you need more time to file, right? I don't know about you. I've had brokers who wait until like mid-March to get me all my documents I need to file, okay? The IRS, when you owe taxes, they do not care. They do not care you owe taxes. So let's say you owe even just $1,000 in tax, okay? You extend because you're waiting on a 1099 to come in. You don't have maybe some health care, maybe a 401k. You don't have all your tax documents you need to make an accurate return. It is advisable to extend, right? So like for example, an individual tax return, right? whether business or not, you're individual, you can extend till October. August for business. You extend because it is smart, because you do not want to make a mistake on your tax return. You want to do it right. Well, if you did owe taxes that year, even $1,000, all right, if you do not pay that $1,000, even if you extended by April 15th, you will pay a penalty with interest, okay? The late payment starts off at whatever the federal short-term interest rate is, plus 3%, compounded daily. Talk to your mortgage professional. Have them go into rates with you right now, guys, all right? I'm sure there's calculators online. I really should make one. But that means after 60 days, you can also face, again, April 15th, 60 days after that, you can also face another, on top of that interest per day, another late penalty of 0.5% per month, up to 25% on that, okay? Now, so you understand, just because you're being extended, I do think all clients should understand that this is a thing, because I didn't know it until years ago when I really started getting heavy into the tax, okay, into the tax world. I didn't know that was a thing. I thought you just extended and you're good. No, when you owe taxes, it's a big deal. Now, you're like, Cameron, well, what if I need more time to get my paperwork in order? You can pay an estimated tax payment, right? So assuming you're making your quarterly payments, because if you're making enough to where this really matters, like this is really going to hurt you, you're probably going to have to pay a substantial amount in tax. Well, if you were making your quarterly tax payments, or you're an S-Corp and you were increased every time you paid yourself a W-2 and every time you paid your dividends, you did make another quarterly tax payment. If you were doing enough to be cautious, you're probably safe, right? Like you have to be within a certain amount of your tax bill. So as long as you get as close as possible when you go to extend, right? Now your tax professional should be able to estimate very quickly when they go to extend for you a rough idea. Now this is why also it can help to talk to someone who does advising for taxes, because you might already know the rough idea of what you owe before the turn of the year in January, okay? But a good professional, especially if they know you're going to be, they look at your initial documentation that you do have, if they really think based on previous years that you're going to be owing a lot more, then you're going to make an initial payment before April 15th along with your extension. That way you can avoid that penalty, right? But understand, you got to be careful. Now, you're like, okay, Cameron, great. I have to make a lump sum payment. I can find out roughly throughout the year how much I owe in tax based on my income, right? Some basic deductions, do some quick math, right? Any good tax professional is going to have the software to help you. How do quarterly taxes work? Okay, so I kind of dumbed it down a little bit. Okay, it scares you with the interest payments. But you're like, well, Cameron, what ahead of the game, how do I beat that? Let me tell you right now, all right? So, how to keep the IRS from knocking down your door come April 15th, because, I'll be honest with you, I usually have to extend my own tax return, too, for my business and stuff like that, okay? But how do you get ahead of the game? Now, quarterly tax payments, right? That means 4 times a year in April, June, September, and January, okay? Now, if the 15th of each of those, now it's on the 15th of each of those months, okay? If the 15th falls on a weekend, the next business day, which typically is going to be the 16th with the calendars roll, but the 15th of April, June, September, and January. By those dates, you must make your estimated quarterly tax payment. Again, I'll have the link to where you pay in the IRS. I also going to have the link down on the show notes where you can go to kind of get an idea of the estimated tax form you also have to submit. Now, keep in mind, if you have an S-Corp, I highly recommend using a payroll service, because when you set up that payroll service, like Gusto or QuickBooks has one, when you use those, you get to set up, and it'll help you inside of it calculate, and you can increase past even their calculation, but it'll help you calculate your salary, depending how long you pay yourself, like, monthly, bi-weekly, whatever. It'll help you calculate, and that is your tax payment for your salary, okay? You want to make sure that number is accurate, though, too, right? You got to be careful. But really, the only time you have to pay quarterly outside of that payroll payment is going to be when you take shareholder dividends, because that is subject to self-employment tax, okay? But it usually exempt from other taxes, okay? We're not diving too deep into it. Just understand, obviously, when you're taking shareholder dividends, you usually have to pay, again, assuming you're going to have to pay taxes, which if you're an S-Corp, you're going to have to. That's when you have to make quarterly dividends or quarterly tax payments. I apologize. Now, you're paying those 4 times a year, okay? The goal, at a minimum, to avoid any penalty, then because remember that extension penalty is a little bit different in terms of the, hey, you didn't make quarterly tax payments, there is a penalty for that. To avoid the penalty, all right, you have to pay at least 100% of your prior year taxes, or 110% of your prior year income if that's higher. Okay? But that's how you avoid, at a minimum, your quarterly tax payments. At a minimum, you have to at least pay 100% of last year's taxes, and within, obviously, if your income's higher, 110% of your prior year income. That is a minimum rule for quarterly tax payments. But don't think you can just do this at the end of the year, the last quarter, and that's okay. Like, the IRS wants to show faith. If you are making money in each of those months, or at a minimum, you know what you paid last year. If this year is going just as well, you want to make a payment each quarter, right? You want to show faith. You are doing those quarterly payments, and you're trying to hit that 100% or 110% number, all right? Think about it this way, right? Not all of your taxes, like a portion of your taxes throughout the year, especially those income taxes, the government uses that throughout the year. That is why it is set up that way. If the IRS wants you, right? We're not W-2 jobs. We are 1099s. That is why they want these quarterly tax payments, okay? The government wants your money. No joke, right? I mean, how many of us know that, right? They want your money. And for that portion of the money, they want your money every single quarter because they are going to use it, right? The government's a big vacuum. They're going to suck it up. But they want those payments, and they want it, okay? So those 4 months, that's when they want it. Again, show notes, straight to the IRS. Don't take it from the horse's mouth. Go there, read it, learn it yourself, okay? You can always reach out to me too. I'm always happy to talk about it. So, like I said, everyone who owes more than $1,000, even if it's an estimated, right? If you know you're doing well and you're going to owe more than $1,000 in tax, benefit is if you know it's your first year, you might not, unless you're really freaking crushing it, which congratulations, right? Good problems to have. But at very minimum, even if you are making some income, you should be setting aside a portion of your taxes, even if you don't think you're going to pay $1,000 or more in tax, okay? If you overpay, you will get a refund, but you don't pay more than you have to, right? So get a good idea, right? And a tax professional, like any good one, right? Especially not during tax time, it's crazy for those of us in the industry. I have recurring programs. I have recurring clients that pay for us. If you shoot me an email, like I can help sit down with you and guide you very briefly, but I just have to know your situation specifically to kind of give you real advice, but it can be quick. All right. Now, don't forget though, as well, if you're doing a joint return, if your spouse has a high paying W-2 or a W-2 where typically you get a refund, that also factors in, okay? If you have a second job with a W-2, etc. Like, you have to understand that $1,000 is what you owe after all deductions, after everything, okay? So, like I say, many of you, if you're not crushing it in the industry, you don't even have an S-Corp signed up, generally you're okay, all right? But, again, it's hard to say, but for most of you who aren't even making enough for an S-Corp to make sense, you're probably going to be okay on those quarterly tax payments. That does not mean, mind you, that you shouldn't withhold like at least 20% of your money just in taxes. Congratulations. If you don't need it for taxes at the end of the year, congratulations, give yourself a bonus, okay? But I'm telling you, I always set aside at least 20-25% of my income, especially if you got an S-Corp or a company. Like, if you're really crushing it, at least 25%. Like, look, the reality is you can't avoid taxes. So it's better to prepare for it. Now, as you go year over year, you can get a little more tactful with it, right? Especially if you have an S-Corp, you have payroll. Like, your adjustment for how much you withhold from every commission check might change a little bit. But for the most part, when you're just getting started, get in the habit of setting aside at least 20% for taxes. It's just my recommendation. It doesn't mean you're going to need that, okay? It can roll into maybe buying expenses and lead stuff for the next year, but I'm telling you, you want to get into the habit of at least setting aside money for taxes, okay? Don't be the idiot who all of a sudden they don't have that muscle memory built. They get to the end of the year, their first year, they crushed it over $100,000. They have an S-Corp set up, right? They didn't set any money for taxes. Like, I've seen it before. It happens. It'll crush you, okay? And the IRS does not care. Fun fact, even if you owe taxes and you have to set up a payment plan, guess what? They're taking interest on that money. You're going to have to set up a payment plan with interest, okay? The IRS doesn't play around, guys. They're going to get your money, okay? So you want to be smart about it ahead of time, right? I know it's a behemoth. Trust me, I get it. We only want to pay our fair share, so doing things right the first time is the right way to do it, all right? Now, like I said before, the truth is you eventually make enough. You're like, okay, Cameron, great. That's $10.99. Well, what do I need to know also about, when I get an S-Corp, okay? Remember, 1099 self-employed agent, or if you just have an LLC or a C-Corp, if you're in California because they're fancy, that money passes through to you as an individual, okay? Even if that LLC, right? It has an EIN, right? It has it has everything set up. It is a quote unquote business. You have all your finances in there. You do your reporting right for your administration. They keep it accurate in your state. It does not matter. So like I said, 80,000 in income, you paid 20,000 in expenses. That 60 grand, even if you never took it to spend it personally, that is your income to start that the IRS will base off of. Okay, it is pass through entity. Even though it might protect you for insurance or whatever, that income passes through to you, okay, after deductions. Whatever's left over that you're legally allowed to deduct, even if you never took it out of your business bank account, that is your taxable responsibility. Gotta love it, okay? Just because you created a fancy company, until you do S-Corp election, it's not worth it, okay? Or, sorry, it is worth it, but you guys know what I meant, all right? Tongue-tied. It's late in the day as I'm recording this. But in S-Corp, what changes when you elect an S-Corp, okay? Essentially, right, you're electing for the IRS, okay? You're like, hey, here's my company. I'm the sole owner. I want to be on salary and treated as a regular corporation, okay? I'm not a pass-through entity anymore. I want to be looked at like a corporation. And what's funny is, it's not really funny, it's just cool food thought. You don't have a regular corporation tax form. You have your own S-Corp tax form at the end of the year. All right. Even if you've done this in TurboTax and stuff like that, it's doing it behind the scenes for you. Okay. And essentially, everything, all the money, just like it is with any other company, staying inside the company, you're putting yourself on a payroll, a reasonable salary. Again, talk to a tax professional, find out what's reasonable for your situation. I did another podcast and newsletter covering the whole S-Corp and what was considered reasonable, good rules of thumb. Not going to dive that into right now, but you have your W-2 salary. So again, I really recommend a payroll. You can try and guess your payroll taxes yourself. Screw that. Use a service. It's just, look, if you're making enough to make an S-Corp, you have to expect to have some extra fees with maintaining it. Okay. I've tried to do it myself. It is a disaster. Get a payroll service. It'll calculate. Not always perfect. You can always pay a little bit more, but it'll get pretty damn close to finding the right deduction of taxes from your W-2 salary. Okay. And the cool thing is for those of you that want to start using your real estate commission, right? You've been in the industry for 2 years. It looks even better to banks that you have a W-2 salary. Okay. And don't forget, you also get to have distribution from your S-Corp where you're not paying as high of tax. Okay. Don't forget those distributions. That is what's required to have quarterly tax payments. Now, I have seen some agents in their situation and some clients, while they have an S-Corp, what they'll do is if they know how much distributions they're going to take throughout the year, instead of making quarterly tax payments, they will set aside in their W-2 salary, you can do this inside payroll softwares, they will set aside more taxes when they pay themselves those salary payments. Okay? If you don't do that and you're paying just enough tax inside those for your salary, those distributions, you are going to have to make quarterly tax payments. So be mindful of that, okay? It goes either way. Either way, you have to be making that tax. Whether it's on your W-2 salary side, you're paying more. When those distributions, that is what's going to be subject to quarterly tax payments when you have an S-Corp set up, okay? Now, you're like, all right, Cameron, what happens if I'm a partnership, all right? Like team leads, I've been in partnerships, right? I got a team right now that I run with my partner, okay? How does it work? Now, you can create a company, especially those brokers out there, those independent brokers, right? You create a company and you can have your own company that owns shares, okay? And depending on the state, again, general overview, the income that you pay to each partner goes to the companies that own it, and you can have your own individual S-Corps. Look, I'm not trying to get into legal aspects here, okay? Don't know your situation, don't know your state that those listening to this. Understand there's a lot of different ways that can go about, but if it's just a basic partnership, kind of like an LLC, a lot of states, you can form a partnership, right? Again, not an S-Corp. You have to find an annual partnership return, right? Form 1065. Each one receives a Schedule K1, which is the income, their even income from that business, well, their share of the profits and loss. So whatever your company profited and lost in expenses, you share that, okay? And then each individual is responsible on that income. But that also means each one's responsible for their portion of quarterly tax payments, everything, okay? A lot of times people will get around this. They'll have the LLC. Again, it depends on your state, your real estate laws for being agents and brokers. Look, not an attorney, not diving into this right now. But the general overview, a lot of people will avoid that. I know I do this, right? So I'll have like a family company that has access to all my other companies, right? So my S-Corp, my family S-Corp, or my trust will have shares in my tax business, my real estate business. So instead of having to individually deal with taxes at those levels, the income, again, it depends on your state, but in Florida, right, that income responsibility goes to the main S-Corp, the holding company, and that holding company is what's the S-Corp and deals with all those taxes. Everyone's situation is different, not legal advice, but essentially in partnerships, there's a way to do it to be smart, and you want to do it smart from the beginning. So whether it's talking to an attorney, right, to get it in writing, right? I know you can go online. I'm not saying you can't. You can form companies yourself, but the reality is, if you're forming with a partnership, it's kind of nice to have an attorney or a third party create the legal guidelines for you to follow. Okay, even when it comes to taxes, because you're spilling the responsibility in that company. You want to do it right. I had to even fix a partnership because we kind of jumped ahead too fast. We individually were partners inside this LLC. It was just a mess. Like the real estate laws didn't line up. I was licensed in California and Florida. Well, I still am. In California, you have to be a corporation. You can't be an LLC. It's created this whole mess of complications. Find the professional and the attorney to do it right. If you're doing a partnership, just do it. I can't. What a disaster that was. We're still great friends. Obviously, we run a real estate team, but those initial years were a mess and I had to fix it. Okay. But be aware, like I said, partnerships add complexity and cost. Okay. Extra separate tax return, right? Each one owes self-employment tax on their share. You still have to be making all that. The partnership agreement, operating agreement. It just gets way more complicated. So make sure you have the right rules, operating agreement, everything in place, especially for your state, and make sure you're following those guidelines. Okay. Now, keep in mind, if you're simply sharing technology cost, there's a lot of ways for agents to share in technology costs. Could be like I pay for Canva, you pay for this lead source, or I do this, you do that, right? There are a lot of ways to write up agreements just to help each other out when it comes to expenses, okay? So it doesn't mean you have to make a partnership when trying to cut costs, all right? And you can explore an S-Corp election for partnerships. So look, there's a lot of ways to get into this. So just understand, if you're just trying to share costs though, a lot of agents out there, right? We buy the same tools, and maybe there's a tool out there, it could be ChatGPT, doesn't matter, okay? But there's a tool out there that you both use where you can save money joining together, okay? There's nothing wrong with that. The hardest thing is deciding who's paying for what and making sure you're okay with that, right? Because remember, if one of you is paying for the whole cost, then that's where the issue comes into, because you're the only one getting deduction for that. But maybe you're vice versa, doesn't matter. Just get everything in writing, all right? Don't run it out there and just make stupid partnerships, okay? Now, what are some smart... So we're coming into the end of 2025, okay? Even if you didn't make quarterly tax payments, look, you do your best. You can still go on the IRS website, make a tax payment for this quarter, all right? There are still ways to do your best, okay? You live, you learn, you move forward. But what are some smart year-end moves and tax strategies for agents, all right? I went to a general overview of tax responsibility. A lot of times it's either using a professional or doing your research, or especially if you're on payroll, make sure you use a tool to do it. Like, there's a lot of great things out there. Don't just DIY it. If you're trying to read, look, don't dive into it. Tax is its own behemoth. Do your best, but you need to understand why you're doing it. But what are some end-of-year smart strategies? So, at a minimum, I love my partner, but when I met him, he had closed about 30 transactions, and he had no business bank account, no S-Corp setup. He paid a crap load in self-employment tax, and he didn't have all of it set aside. Disaster. All right. First off, look, it's too late to make an S-Corp for the next tax season. You're already past it. Every year you have to elect, either create the company, but you have to, and you have 90 days once you create it. So if you don't have an LLC and you create it right now, you can elect S-Corp. But the problem is you already had income not in the S-Corp from beginning of the year. So it's only the income for the next month and change that you would have access to. All right. The rest is going to be subject to self-employment tax. If you haven't elected S-Corp and you wish you did, look, it's okay. Live, learn. Come January, you can elect, well, even you can do it right now, but you can elect S-Corp status, and not for this 2025 tax year, but for 2026 tax year, then the S-Corp rules will apply. Just make sure you're starting January 1st, you are running your S-Corp like you are supposed to, all right? But you want to start cleaning up your books, guys. You want to start making sure, are all your accounts reconciled? Are you using an accounting software? Should you? Are you doing it? Do you have everything tracked? Mileage, right? If you're talking vehicle expenses, mileage, okay? Are all your expenses categorized, right? Like, you want receipts. Generally, the rule of thumb, you should be keeping receipts for everything. but especially for purchases that are $75 or more, you should have a receipt and invoice attached to that expense, right? It's not look, a lot of people say that, like, a lot of things on social media, like there's tips and rules, like how to avoid being audited, how to how to pay zero in tax. Like the reality with all these things, just do it the right way. Keep your documentation. The way I run my businesses, even, and especially the way I treat my clients, it's not always a matter of if you get audited, it's when. So even if for some crazy reason you did everything right, you did everything legal, and you still got audited, guess what? You want to have the paperwork and everything in place to make sure you can fight them, okay? Make sure you have everything in place. So clean up your books. Make sure you have your receipts filed, like tracking mileage. If you're using a home office, make sure you are tracking all of that good. In future weeks, I'm going to have a whole home office, like how to rent your bit, all this stuff. I'm doing a whole episode on that, right? So look for that in coming weeks. But you want to track all of that. Start cleaning your books. Don't wait till the end of the year. Make sure your checking account for your bank agrees with your accounting software. Track it, okay? Again, if you haven't been using an accounting software, if you're a single agent who's not making a lot of money, okay, Wave Accounting, W-A-V-E, Wave Accounting, they have a free version. You can upload your bank statements. It's not automatic like QuickBooks, but it'll track your expenses, and then you just have to categorize them. That's a simple way. Everyone else, look, you can try and avoid it. QuickBooks is just the best. And it's not cheap, okay? If you're self-employed with no company, it's like $15-20 a month. Once you have that S-Corp, right, not even including any payroll software, just for accounting, you're like $30-35 a month for QuickBooks Online. I know it can annoy a lot of people, a lot of agents out there. The reality is, guys, it's just one of the best out there for small businesses. It just really is. Just make sure you go back to my previous episodes for how to set it up, but you want to be using QuickBooks. All right, but start getting those books clean, okay? Before any deductions, you have to have your books in order to find out what deductions you can even take, all right? Fun fact, okay, you can always reach out to me in the link in the show notes, but if you schedule a call with me and the team, we do offer tax advising, and I'm going to get into that here in a second, but I'm going to dive into it. Just understand, if you had a crushing year, you're not like a lot of the agents struggling because of high interest rates. I know we had it's still like cutthroat world out there for us agents, okay? But if you had a really good year, more than the year before, you don't know what's going on, it's not that much money, you can get us for, depending on your situation, hour, 2 hours. We can sit down and we can actually calculate and give an estimate of what your approximate taxes are going to be for the upcoming year. Also, if you want to play around, because there's still time left in the year to get some expenses, right? 401k, IRAs, get that money in. You can reach out. We can run those scenarios to find out if you can save massive on your taxes, where you can save on your taxes. Doesn't make sense, okay? Now, continuing with what you should do for the rest of the year if you're not one of those people, okay? Strategic deduction. Man, I cannot talk today. Strategic deduction timing, okay? Using that tax planning session, whether with a professional like me and my team or by yourself, right? Just to get an idea of where you stand, okay? ChatGPT is great. It misses a lot of things. I'm not going to lie to you and say that you can't start asking it, okay? You can start asking its questions, upload your previous tax return. Keep in mind, if you're not paying for the business level of ChatGPT, which at a minimum, that's what we use, it does not have the security level approved by the IRS, right? So even for my firm, right? Everyone uses ChatGPT. Whether we're using it for marketing or my team's using it for just questions, the reality is you have to pay at least for the business model. So don't start uploading sensitive data to just the regular pro or whatever plan on ChatGPT. It is not secure. You, at a minimum, need to be paying for that pro plan to get the level of security you need for sensitive data, okay? But you can, like I said, once you have an idea of what you owe in taxes, a lot of people, there's a lot of advice out there. You go out there, buy a car, start doing these crazy things. I don't generally recommend our clients do that, okay? If you know, for example, some software out in the world, you can buy a year in advance, right? You can pay for an annual plan. For a lot of our softwares out there, most software allows a payment in annual payments, right? You can buy the software and an annual license. Usually, you get to save a good percentage on the cost of that tool, okay? And at the same time, you get to write off that expense in this tax year because we're not done yet, okay? If you're able to, like Google Ads, stuff like that, you can prepay into an account, right? That can be deductible, right? Depending on what your ad credits are, your marketing services. A lot of times, some of these services, if you're using a marketing company, you can prepay in advance for services that you're already going to pay for anyways. That's the key here, all right? Don't start running out there, spending all this money, thinking you're going to get a tax deduction, right? Get a loan on a fancy new car that you think, or a loan, whatever, that you think you're going to get a tax deduction on that you weren't going to buy anyways. Look, a lot of people want to find how to pay zero in tax. Look, if you want to buy rental properties, 401k, IRAs, like more investments, go for it. If you know what you're doing, you're comfortable with it, get your investments in. Absolutely. Invest, grow your wealth. In terms of random expenses though, if you weren't going to pay for it, generally the rule is don't go out there just wasting money for no reason. It's not going to save you. Most likely it's not going to save you on taxes what you think it will. All right. But if it's stuff you were going to buy already and you have the opportunity to prepay in advance or to buy something sooner than next year, freaking do it, right? Like get those deductions in, get those plans in place, right? I already covered retirement contributions. Like, look, this is your time. If you haven't maxed out any retirement plans that you have, do it. Max them out. Get your credits in, okay? Don't waste it. If you know you're good for the rest of the year and you can do it and you can swing it, get those contributions in, all right? That's a big one, right? But don't just spend money to spend money. Like, come on, guys, right? Like, it's not going to save you what's going to save you, all right? So the next thing really is just those like a basic overview, okay? Look, it depends. Everyone's situation is different. I'm going to have, again, I think it's going to be coming out next week. I'm going to have the top deductions agents need to look at, but everyone's situation is different, right? Maybe you have a spouse, right? Maybe your spouse doesn't work. Maybe your spouse does work. Maybe you have an HSA account. Maybe you have to pay for health insurance, right? There's all these things that everyone's personal situation is different. I can't give you general advising. I'm going to try and have that one out next week, which is the top deductions and savings ideas and plans that agents need to look at and brokers. But for this one, look, general overview. Get your numbers in order. If you have an ability to spend in advance, freaking do it. Get those expenses in so you can try and cut your taxable income down come tax season. Now, when do you hire help? All right. So in the financial world, for agents and brokers, and this is really any small business, okay? But you essentially, you have a couple key players in your space. You have a bookkeeper. You have a tax professional and advisor. I'm not saying licensed, unlicensed. I'm going to cover that here in a second. You usually have, right, maybe if you have a couple businesses, you might actually need to hire a CFO. Usually it's investors, okay? If you're doing that crazy good as a broker, generally, a lot of times, most of you, your bookkeeper can be a CFO type of personality for you, okay? And then you need a financial planner, and advisor, and planner. Fun fact I learned also, but well, you know what? I'll save it for the end. Let's cover bookkeeper first, okay? Who are they, right? They could be a virtual assistant. Love virtual assistants. I don't have any on my team right now. Have a lot for the real estate side, okay? I love virtual assistants. They're amazing. They're hardworking, right? Moving forward, I'd like to hire more jobs in the U.S. Just my preference, okay? Especially dealing with, agents and brokers dealing with your money. I just think it's better business practice for all tax work, front-facing jobs to be used by Americans, right? People who are licensed, they know what they're doing, all right? But bookkeeper, okay, you can hire a VA for this. Absolutely. Right now, we have monthly plans where we not only will do your books for you at the most basic plan, but the highest level, I'll do all of these things that we're about to cover, minus financial advising and planning. Okay. Now I can give you tax advice for what the situation or the plans you have set up, how we can maximize your plan. I'm not going to sit here. I'm not a licensed financial advisor or planner. Okay. So just understand right now. But we do like the CFO, the tax professional, the bookkeeper for monthly fees. Like I'll do all this for you. I'll track your books, especially for the mid-tier and higher plan. I'll even meet with you, whether it's a monthly or quarterly basis, and give you an idea of like, hey, here's the income that came in. Here's where the expenses went. Here's how it looks. Hey, you had this many leads closed from this source. You spent this much for that source. Hey, you spent this much for that listing. Here are the listings that did very well. Hey, this zip code, generally not doing good. All that, okay? We'll do all of that. You can do it yourself. You don't need me. I'm mainly for me and my team are mainly for the agents who, hey, I need someone who knows what they're doing, and I need this off my plate, okay? But bookkeeper, you want to make sure they're trained. Tons of videos out there. Look, there are licenses for bookkeepers, but generally you need someone who knows how to track accounting, to use whatever accounting software you're using, right? They need to understand what a bookkeeper is supposed to do, okay? They need to know, right? You're an agent, so they need to know how to make sure they're tracking books. That also is beneficial for you when it comes to tax time. All right. Not all bookkeepers run payroll. Many do. Not all of them do. But understand that's an additional layer of tracking they need to do. Bookkeeper, you can use a virtual assistant for this. Definitely not something that you I wouldn't say don't do. Okay. But don't forget, if you're going to hire a bookkeeper, you need to understand how to do your books yourself. Okay. Now, next level, tax professional and advisor. Okay. Right. Full disclosure, right? I am studying for my enrolled agent exam. Okay. I'm about to take my tests. I will be licensed very shortly into next year. But understand there are different levels to this game. And like I said, I'm no pride here. Okay. I'm going to be fully honest when it comes to this. Tax professionals. Okay. You have H&R Block, right? People are just like, let's go to Cameron, let's go to TurboTax. For most of you that are 1099, you don't have a company, you're just doing basics, you can figure it out. It's not that complicated when you're not making that much money. Just freaking use TurboTax or whatever software you want to use. You don't really need to use any tax professional, right? If your money is not that complicated and you're not in a position where you want to hire someone to take, like someone you trust to take care of it for you, okay, then look, there is no need. You can do it yourself. For anyone who's making, like I said, you don't have any entities set up or you're not making that much money in the game, just do it yourself, okay? If your financial situation is not complicated, you just have like a W-2 job, maybe one rental property, like very, very basic. You don't need to call me. I know, weird, coming from someone who, gets paid from agents and brokers to do taxes, right? You don't need me. You don't need a CPA. I've spent thousands of dollars during tax time for help. And funny enough, the last one I did before I got into this business cost me about $2,000 in unpaid California taxes, even though I thought he did. So that's great, right? Understand also, many in the tax field are CPAs. I am also working towards my CPA. Okay. What is the difference? You have in the tax world, and you need to know this as business owners. Okay. You go out there, start looking at people. You have regular tax preparers in the United States. Anyone is allowed to prepare tax returns, right? They have to go through the IRS. If they're extra special, they can even take IRS courses to be certified in certain areas, right? Tax preparers, right, they cannot represent you in front of the IRS, okay? Now, there are certain things that you can do as a tax preparer to, at a basic level, do some work for the tax returns that you file, okay? At a minimum, right? And even when you go to H&R Block, most of them are just tax preparers. What's the next level from that? You have enrolled agents, also known as EA. This is a federal license, okay? There's no open book exams. It is a lot of testing. You have 3 massive exams, right? Close through February 28th, testing closes. But these people they did a lot of studying only in taxation. They have all the same rights in the tax world as CPAs, okay? They can represent you in front of the IRS. They are licensed. You know what their level of worth is. At a bare minimum, they know that they can put their head down. Much like us as agents and brokers, it's verification. We did the test. We did the bare minimum, right? All humans are flawed. Doesn't mean people don't make mistakes. A good EA firm, right, will have insurance, right? Even CPAs, even us, right? At my firm, okay, we have cyber insurance. I pay for E&O insurance, right? Like a good actual firm takes their care to make sure they are doing things by the book. Even with the IRS, I have to have a plan with how I treat your sensitive information, okay? All these things. As someone who is aspiring to be a CPA, CPAs, certified public accountants, are the highest level in the accounting world, okay? They are the top professionals. I also will say CPAs have messed up my tax returns since 2017 when I first had my first rental property, a few more times more than, again, I just probably found some bad eggs, bad recommendations. But generally, just because you're CPA does not mean you are the best when it comes to taxes. Same with EA, okay? We're all humans. We're all flawed. No one's perfect in the eyes of God. No, it ain't going to happen. But CPAs, okay, understand, generally a CPA is probably helping a higher level of clients. So depending what level you are as an agent or maybe as a broker, it doesn't always make sense to go to a massive CPA firm because you also don't get the special care that you would, okay? It just happens. But CPAs also can make mistakes on taxes. Just because they're CPA doesn't mean. Now, generally, they are at a higher level, okay? So they are at the top, all right? But don't think just because they're CPA, they're not going to make mistakes, okay? It happens. Again, I'm going for my CPA, guys, all right? I had to go back to school, even finish it. I'm going to finish it. My EA is coming first. But EAs are tax-only. CPAs, they are top, but they take a rounded approach to all areas of accounting. Again, both federal licenses. That's why a lot of CPAs will also be enrolled agents, because it is a tax license. Fun fact, states like Hawaii, only EAs can do tax returns. CPAs can't even do tax returns. They have to get the EA on top of that, okay? Now, my experience in all these positions, run through real quick. Bookkeeper. Most of you probably can do it. You need to do it yourself. You need to learn how to do it yourself. Past that, once you start getting it to where it shouldn't be something you're doing, you could hire a VA. You could hire someone like my firm. Really up to you. But generally, there will be a point where you need someone to do it for you. Some firms, even like myself, we will clean up your books at the end of the year for you. So even if you're not a regular year client, like there is a fee depending on how many like transactions and how many months you need us to fix. We will just clean up your books at the end of the year. Unfortunately, it's not as good of a touch as someone who's doing it day in and day out, because they know your books and your business in and out. Bookkeeping, probably the simplest of all these. Tax professionals, okay? Like I said, just because someone's a CPA doesn't mean they're best for you. Just like I said, my firm, we are focused on realtors and brokers, right? It's what I know. I'll even handle real estate investors up to 24 units, okay? I have a limit. I have a niche. So every single day, because I'm weird like that, like I'll just read IRS publications, laws, cases. I love it. It's fun. But I focus on our area, which generally falls through small business, but I choose to focus in real estate agents and brokers, which is independent contractor work, okay? It's what I love. It's what I know. So I try and be the best I can. Will I help other people? Most of the time, especially if they're W-2, sure. We have some W-2 clients that come into my practice. My main focus is helping for business is real estate agents, brokers, and investors, 24 units and less, okay? I set my limits. I know what I'm comfortable with. I know who I can help most, all right? So find a tax professional. Doesn't matter who it is, okay? Most tax professionals out there, like every state law, there's federal laws that we have to follow, okay? But you need to find someone who is in your niche, understands your niche, and can help you get the best tax reductions, okay? There is no such thing as a CPA that can do everything, okay? They're a CFO of a major company. They're a tax professional. They know everything. Can't happen. Like real estate agents and brokers, we have our niche. A good firm is going to have a niche that they're looking to serve, and that may change over the years, but find a firm like EA, CPA, doesn't matter, but a tax firm and professional that understands your needs and how to help you best. Okay? That's all I'm going to say on that. Good luck out there. Now, for financial advisors, hey, fun fact, I don't have much here, okay? I'm not throwing shade, but I found out that like 90% of financial advisors are tied to a broker like us. Very few financial advisors are what's considered independent. There's an actual term for this. Again, I'm not throwing shade. I don't know. I've used financial advisors too in the past, but most fall under brokerages, right? And the thing is, a lot of those financial advisors, they're kind of stuck selling their brokers' terms of products. Not that some can't have more flexibility than others. If you have a good financial advisor, awesome. But there's very few truly independent financial advisors. So just be mindful on this one, okay? The reality is, you will know, I think, when you make a lot of money. Like, I tried to jump into these things too soon when I wasn't making that much money when I first got started as an agent. You go out there and make money, okay? When you start stressing about losing your money to taxes and wealth building, and it happens faster than you think, that's when you're ready, okay? Just always be mindful of it. Learn your foundations, but you don't need like thousands of professionals when you're just getting started, okay? I'm telling you, I've had agents come to me even for this year, right? They're like, Cameron, they're getting brought in, and I'm like, dude, you made like 20 grand and you work a regular job. Like, look, I will help you because I'll help anyone, especially in my niche, right? I will help you and I will do the best dang job that I can. But the reality is, if you're just an agent getting started and listening to this, don't waste your money on all these professionals. Like, everyone will just take your money. I try and be very honest. When you're just getting started, you don't need all these complicated positions for you. You don't even need VAs until let's be honest, most of us need to work harder, myself included. All right. But that's my final thought. Taxes aren't a big fear. If you know how to properly run your books, do everything by the book. If you don't know, find a professional that knows for you, that you trust, and can guide you along the path to become a better business owner and realtor and broker. Okay. Know the rules for your business, right? As agents and brokers, know the rules not only federal, but your state. That includes business, entity, all that. Okay. Make informed, strategic moves before year end. Don't just start winging it, okay? If you really don't know, find a professional you trust. Or sit there and freaking grind it out and figure it out, all right? There's tons of resources online, okay? If you are in a position where you need a deeper level of trust, all right? Doesn't matter what level you are of income, but you're a realtor, broker, investor with, like I said, 24 units or less, you're in a position where you're ready to make that connection, to have a group of individuals that are there to help you along the path, that know your pains, are active in this industry, whether buying rentals or as an agent, okay? My firm is here to help. It's all I want to do. I love doing it. This is just, I don't know, it's my way of giving back, okay? I'm not going to tell you how to generate leads. Like, most of you are probably better at that than I am. That's why my partner handles the marketing for that real estate team, all right? I love handling the commission afterwards. Most of this is stuff I did not know before I got started. I wasted thousands of dollars, probably more than 1,000. I wasted a lot of money on things that I did not need to spend money on, or just stupid decisions because I was, at EXP or with this group of agents, and they were all making hundreds of thousands of dollars. So I'm trying to do what they're doing. Look, be yourself, but make sure you find the people that you can trust. All right. So hope you got value in this episode. Like I said, there's always a link down below if you want to get a call with my team. Links to anything we talk about in the show is always in the show notes. I hope you got value at some point, or at least I sparked a thought for you today. I look forward to seeing you next week. You can always also send me a message on the newsletter or the podcast website. It allows you to message me on there. Hit me up. Or you can send, info@superdadtax.com. If you have any episodes you want me to do, deep dives into topics, send it there. I hope you got value, my friends. Always take care. I'll see you next week.